Good morning, everyone. You're welcome to another edition of the Vetiva Breakfast Meeting, brought to you by Vetiva Capital Management in partnership with Frontier Africa Reports. In today's session, we'll be hearing from our economist, Ibuku Omoyeni, and he'll be speaking on the FS outlook for the third quarter. We'll also be getting the usual rundown of the equities and fixed income markets from our traders. Before we go on, we'd like to remind everyone that the meeting is being recorded and it may be shared with third parties. We're also streaming live on our Vetiva online Facebook page, so you can join or view from that platform. The session is set to last for 30 minutes, inclusive of Q&A. And during the course of the session, you can send in questions using the chat function available on Zoom and the comment session on Facebook. However, we'll be having a Q&A segment, and if you prefer to speak, you can make use of the raise hand function and you'll be called upon to speak. We'll now be starting off with Ibuku Omoyeni, and he'll be speaking on the FS outlook for the third quarter. Good morning, Ibuku.
Good morning, Victoria, and good morning to everyone. So yesterday we released our FS outlook report titled Resilience in Uncertainty. The report actually summarizes the performance of currencies in Sub-Saharan Africa for the first half of the year and for Q3 2021. Come on, now, please. Okay, so like I said, so we covered FFA currencies for the first half of the year and for the third quarter. So by our analysis, we discovered that we saw some slight weakness in the South African rand as well as the Ghanaian cedi because of the recent demonstrations in those countries. We recall that following Jacob Zuma's court ruling, there were protests in South Africa, and following the fixed the country protests in Ghana, we also saw currency weaknesses in both currencies. The Ghana weakened to an all-time high of about 6 cedis to the dollar. So down to other currencies, the Angolan kwanza, which is relatively a petrol currency, actually gained due to the rise in oil prices. Actually gained, while the Nigerian naira was relatively stable. So looking at Nigeria itself, we saw that the CBN, the policies which the CBN has enacted in 2021 are very similar to the ones they enacted in 2016. But this time around, because the NAFEX rate has been around, that is the Nigerian Autonomous Foreign Exchange rate has been around for about 4 to 5 years, it was easier for the CBN to adopt the NAFEX rate as the official exchange rate. And that did not really have an impact on the NAFEX rate. It had an impact more on the parallel market, because we saw that move made the parallel market to weaken beyond 500 naira to the dollar. Although the CBN tried to intervene, increase FX supply for travelers, yet we saw that the parallel market could not retain, would not go back to 480, 490 levels. So what we also saw during the course of the quarter was the introduction of the ban, that is the BDC ban. And we discovered that since that ban has been in place, even though FX liquidity has been improved with the banks and everything, some players will still not have access to FX. And that is why we believe the CBN recently decided to clamp down on some fintech players, which of course is part of the effort of the CBN to manage FX. But what we see for the Naira is that the Naira has not weakened as much as it did in 2016. We actually expect the Naira to close Q3 at 518 Naira to the dollar. I will expect a possible appreciation in Q4. So we anticipate either two of this will happen. It's either we see the relaxation of the BDC ban after the CBN is done with its intervention in the FX market, because I believe currently the CBN is trying to see what is taking so much demand in the retail FX segment. That is why we saw that policy on those fintechs. So we believe by Q4 we should be seeing an alternative arrangement in place of the BDCs, or a relaxation of the ban on BDCs, and that could actually be a lever for the Naira. So we see the Naira appreciate to 506 naira to the dollar. And if this is actually done early enough, you could see the naira reach 480 levels to the dollar again, which will be another long-term increase in the parallel market. So our outlook for reserves remains bright because we are expecting 6 billion in Eurobond flows, as well as 3.4 billion from the IMF, and the 3.4 billion can easily be converted because it's an asset, not necessarily a debt burden. It's an asset. You see, the government just has to convert its SDR assets to any of the 7 currencies, and that's how our reserves will be able to build. But buying that, we actually expect crude oil to remain stable at $54 per barrel, and we actually expect reserves to improve and the possible appreciation in the parallel market trade. The IRN rate is expected to remain stable, close the year at 414 naira to the dollar. So that sums it up for the parallel market, for the FX outlook. Thank you, and over to you, Victoria.
Thank you very much, Ibuko. Next up is Simbiat from our Global Equities Desk, and she'll be taking us through some equities markets across West Africa. Good morning, Simbiat.
Good morning, Victoria, and good morning to everyone. Yeah, so I'll be starting off with reviewing the performance in BRVM. The market continued its upward trend as the index closed 57 basis points, with year-to-date return now at 19.53%. Closing positive were different counters across sectors, and particularly stocks like Solibra Côte d'Ivoire and NEI said that Côte d'Ivoire have seen continuous price appreciation. Aside the positive close we've been seeing, market breadth has also closed positive yesterday. We had 20 gainers and just 8 stocks declining to close the session, signaling positive market sentiment. Going into today, we expect to see the market trade in similar pattern, but we do not rule out the possibility of profit taking on some recent gainers. In the Ghanaian market, composite index closed up by 8 basis points, with year-to-date return now at 41.64%. As expected, MTN Ghana recorded the highest volume of traded shares yesterday, although it was significantly lower than the volume on Wednesday. And Unilever still remains the only gainer in the market with a 9.92% price appreciation. Going into today, we expect the market to trade quiet. We have seen the market trade quiet, and we believe this will still filter into today's session. Finally, in the Nigerian market, the equities market closed marginally down by just 1 basis point. Week-to-date return 6 basis points up, while year-to-date loss moderates to 1.8%. We saw some of the tier 1 banking stocks shed point, the likes of Access, GTCO, and FBN. Market activity traded mixed yesterday. Volume improved by 19.24%, while turnover declined by about 13%. This was largely due to increased demand in some of the small cap names like Chams, Cotville, Farmadeco, and Onifla as well. Our expectation for the market today, we have seen improved interest in some of the large cap names like Airtel, MTN, and Danksem, and we expect this to persist in today's session. Also, we anticipate a mixed trading day amid renewed interest in some small cap names like I mentioned earlier. Thank you, and that'll be all from my end.
Thank you very much, Simbiat. We'll now move to Omorige, and he'll be taking us through fixed income and currencies. Good morning, Omorige.
Good morning, Victoria. Good morning, everybody. System liquidity declined significantly yesterday to open at 7.6 billion negative, coming from the 21.8 billion positive that was recorded on Tuesday. As a result, interbank rate tightened by an average of 29 basis points, as OBB and overnight closed at 17.5 and 17.75 respectively. We expect interbank rate to trade at lower levels today in the absence of any significant funding need in the market. The parallel market lost 2 naira yesterday to trade at 517 naira to $1, while the earning window opened at 411.39 naira to $1. The highest rate that was recorded yesterday was 413 naira to $1, while the closing rate was 411.75 naira to $1. Brent and WTI lost 1.3% and 1.4% to open today at 67.38 and $64.53 per barrel respectively as demand concerns persist. The T-bills market traded on a relatively quiet note yesterday, with sustained interest on the long end of the benchmark curve. The maturities that enjoyed the most action yesterday were the 28th July 2022 and the 11th August 2022 papers, while trades were majorly consummated on the CBN Special NTB, that's the 30th August 2021 and the 28th July 2022 maturity. The OMO market traded with bearish sentiment yesterday with little or no interest in the market. There were a few trades consummated as average benchmark rate rose by about 6 basis points to close yesterday at 7.42%. The bonds market traded on a muted note yesterday as market players awaited the result of the monthly bond auction that held yesterday. At the auction, the DMO sold a total of 206.09 billion from the offer amount of 150 billion across the three tenors as the 2028, 2036, and the 2050 maturities, while dropping marginal rates across those three tenors by an average of 53 basis points. Stop rate for the 2028 and the 2036 papers were allotted at 11.6% and 12.75% respectively, while the stop rate on the 2050 paper was allotted at 12.8%. The key takeaway from the auction yesterday is that the DMO is still very aggressive in the local market, as fears of them being less aggressive because they are tapping into the international debt market should be put to rest. But then again, we are not very sure if they are going to maintain this stance in the subsequent auctions, even after the Eurobond issuance. We'll continue to monitor the market closely and see how it all unfolds. In the secondary market, the benchmark rate declined by about 4 basis points to close at 11.84% at the end of the trading session yesterday. The Eurobond market continued to trade actively as we saw sell-offs across the sovereigns. Offers on the 2049 maturity continued to improve as yesterday it closed at 8.05%. The corporate space recorded another muted trading session with few sell-side interest on the Access Bank 2021 and the Feedbank 2022 Euro bonds. For expectation today, we believe that the bonds market will trade actively with the current bullish sentiment most likely sustaining. However, we might see a slight uptick in rates on the back of the significant amount that was sold at the auction, which is about 206.09 billion. The increased supply might just be enough to spur slight improvement in rates. It will be very interesting to see how the market balance the drop in market in marginal rates at the auction, the increased supply, and the aggressive stance of the DMO. For the T-bills market, we expect it to trade in line with system liquidity. That will be all for fixed income. Thank you.
Thank you very much, Omorege. We have now come to the Q&A segment. If you have any questions for our speakers, you can make use of the chat function on Zoom. And if you prefer to speak, you can make use of the raise hand function and you'll be called upon to speak. Also, if you're joining us from Facebook, you can make use of the comment section. Okay, it looks like we do not have any questions today. That means we've come to the end of today's session. On behalf of Vetiva Capital and our media partners at Frontier Africa Reports, we thank you for joining us today and hope to see you in tomorrow's session. Have a great day ahead and good morning.